Hey, it's Clay, and this will be a video chart on ticker symbol HCHC. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like you this time frame that does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. I don't mean to state the obvious or rub salt in the wounds or anything like that, but yeah, pretty rough day here, but that does translate into what is not what I would consider a very interesting potential trading setup. And the setup is, revolving around the fact that, like I said, yeah, the price did get hammered for a majority of the day. Majority of the day, the price just kept dropping and dropping and dropping, and then all of a sudden the late afternoon occurred. And during that, the price finally just started to go sideways. Now, I get it if you're saying, well, geez, that's setting the bar kind of low. You're calling sideways bullish. Yeah, I get it. That is kind of rough. But let's keep in mind the context of things. And the context was that up until the price was going sideways, I mean, literally all the price was doing was going down. So, yeah, going sideways does create an interesting scenario. Now, don't get me wrong, and I wish I could say trading was this easy. Just because the price is now starting to go sideways after getting absolutely hammered does not mean that this is for sure the bottom and the price is for sure going to bounce. Now, would it be shocking to see a bounce? No, that would not be shocking at all, but myself nor anyone else can sit here and say that a bounce is for sure going to happen just because there's no such thing as a for sure in the market. Now, the first level to keep an eye on is, there's certainly nothing complicated behind this. As far as supports is concerned, and that is just down here at 345. Why 345? Well, that's just where the bleeding stopped today. The bleeding finally, pretty much just kind of like the Band-Aid level. Bleeding stopped at 345, so we'll see if this is indeed going to, continue to act as a Band-Aid, or is, the bleeding going to start all over again and kind of rip back off the Band-Aid via a break to the downside. But as it stands right now, you can see on about 3 separate occasions, the bears did try to press down through there, and each and every time the price was able to hold strong. So 345 initial area of support. Now, in the event the price does start to bounce, let's talk about a couple areas of resistance. Initial area of resistance, going to be right here at about $3.70. This is basically the top portion of this little channel pattern that formed during the late afternoon. If the price can break out of that little channel pattern, next key level to keep an eye on right up there around $3.88. If the price can get some closes up above $3.88, I'm sure I'll be back at that point in time. But yeah, interesting setup going into tomorrow, and we'll see if the bulls can get themselves a bounce or not. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.